Welcome to the Imperial Wealth Podcast, Australia's #1 crypto mining solution provider and leader in training and education, covering the latest news and insights into macroeconomics, cryptocurrency markets, altcoin news, and technical analysis. So now, without further ado, let's hand it over to the Imperial Wealth team.
All right, guys, welcome back to another podcast by Imperial Wealth. We have a lot to cover today. And first of all, I just want to go through some things that we've recently launched. We're a lot more active on our social platforms at the moment. We're starting to put a lot of free content out onto Instagram as well as TikTok. And we're also doing a lot of posts on our Twitter as well. Any major articles that Mitch, who's sitting in the podcast today, is putting out there for you guys, we're retweeting onto our Twitter. And we're putting a substantial amount of free content, which is mostly educational, onto our TikTok. I'm going to quickly show you what these platforms look like. Just going straight across to them now. We've obviously got our YouTube channel, which you guys are on today. And in here, you'll find a lot of educational content, mostly tips and tricks. Our best crypto tracker apps and portfolios is the most trending video at the moment. And there's plenty of content that you can get yourself across there just to be constantly improving your knowledge within the cryptocurrency space. Obviously, our Instagram is a lot more kind of fun and just, trending topics at the moment, and a lot of reposts from our other platforms. And then on our TikTok, we're starting to put out a lot of educational videos as well. We're going to be doing a lot of giveaways over the next 30 days. So we're going to be giving away coins that we're investing in, as well as giving away free tips for coins that we're currently buying now as well. So well worth getting across those platforms. Outside of that, we've got a lot of fundamental news and some technical updates to cover today. So I'm going to hand over to Mitch and he's going to get things kickstarted over there.
Yeah, so thanks, Will, for that. It's been a super interesting week, I guess, kind of dating back to almost last Friday, I think it was, when Taylor was messaging me about the large sell-off that occurred. Might as well quickly cover that off because probably a lot of people didn't know what happened, but it was actually, interestingly enough, the result of a very large whale spot sale on Binance that unwinded about, I think it was 40,000 Bitcoin, was it? Yep.
Huge.
A lot of people might not understand the technicalities of it, but once someone, does that in one hit, it can hunt a lot of longs, and then what happens is price just kind of free falls downwards, and that's kind of, I don't know what the candle was, but I think, it was in 45 minutes we dropped almost $1,000 or something, was it, or even more?
It was less than that. It was literally in 5 minutes we dropped $1,000. It was crazy.
Yeah. So, and then I guess since then we kind of turned into a stable coin a bit, didn't we? We kind of traded sideways from Monday until this morning, really. Probably ranging about $100 to $200 once we caught that support and that sell-off occurred. And then really the recent price action today for us Australians, or overnight I should say, and then throughout the day for Americans, revolves around much of what the US Feds are doing, as well as some other fundamental things that we'll jump into. So we'll get started with that today, because there are kind of a few a bit of FUD going around in the market at the moment. One of the more infamous ones that's kind of been around now for years and years is the Mt. Gox release of Bitcoin, payments to those creditors that require their Bitcoin back, essentially, because what happened is, I think they're a Japanese exchange and they were hacked in 2014 or 2015.
Yeah. I feel like we hear about this every 6 months. It's always a new update, and it's always, oh no, beware, and then nothing else to a degree.
Yeah, so we kind of wanted to cover that off because, it seems to be a bit of a false narrative out there that the whole 140,000 Bitcoin is going to be dumped on the market as soon as it's given back. But that's not really the case. Two of the largest creditors that make up 20% of this payout actually have asked to have their payments denoted in BTC as opposed to fiat, which means they'll just directly be given the BTC as opposed to having to sell it off and then receive the fiat. which is good. And then apparently a lot of the people that are getting paid out are still crypto maxis, so are looking to hodl it at the bottom of what is nearing the bottom of the market or at the bottom of the market, as opposed to kind of selling it straight away and getting that liquid cash. It's probably a smarter idea to probably hold it across the next couple of years. And, you know, I think the good thing for these guys is, you know, well, back then they would have probably got it for what, $800, and now they'll be getting it, you know, worth, you know, 20,000, 22,000 odd. So, yeah, that's good for them, and I think that's good for the market as well, that, you know, these things are being recovered, because sometimes, more often than not, we don't see people get their money back. So it's good that even, you know, what is it, almost 9 years later, we're getting a solution on this somewhat. So yeah, that's
Gives
good.
some hope to those with FTX and whatnot as well.
Yep.
This can happen again, hopefully.
Hopefully not. But yeah, and I think, you know, whilst we're touching on these kind of events that are out there flooding the market, is the Shanghai Upgrade for Ethereum, in which, you know, there's a lot of kind of rumors out there that, you know, this huge, you know, $30 billion odd of ETH is getting unlocked, and everyone that's getting it unlocked is going to dump on the market, and ETH is going to plunge in one hit, and so is the rest of the crypto market. So there's a few reasons why that won't happen. Obviously, one of them is they've got mechanics in place that allow you to queue up, and it's actually you receive your ETH over a number of days, as opposed to just getting it straight away. I believe it's a 2-tier withdrawal system. So yeah, essentially partial withdrawal. So, you know, amounts above 32 ETH will be executed immediately, but like expects to be distributed across kind of a 3-day period. And then obviously there's other metrics, Will, like I think it's Lido or Lido, however you like to pronounce it.
We had a podcast debate on how you pronounce it, so we'll just go with both. But I will bring it up on the website now. It's important to remember that a lot of the funds that are on Lido or Lido are actually liquid staked, and they've been available to a degree since they've been staked. So basically what happens on this platform, you can see that people stake their 32 ETH or 1 ETH or 0.5 and an ETH into the platform. Currently there's 9 million Ethereum staked on the platform across 285,000 stakers. And when they stake that Ethereum, they get given a token in return called ST-ETH. Now, what they're able to do with that, as it says right here on the website, is they're then able to go and trade that token and to free up their liquidity. So to a degree, they've already been liquid. They haven't necessarily been locked in like people running their own validator nodes. And this does account for a massive portion of the locked Ethereum in the market. So that alone is already being traded in the market. You know, it's not going to have as big an effect. There may be a little bit of a sell-off, I'm sure. Like there's a couple of retail traders out there that have, you know, had it to the ends with, you know, current market conditions, and they can't wait to unstake their Ethereum. But the majority of the Ethereum that's locked up is probably there for the next 5, 10, 15, 20 years, not really for the next 3-6 months. So it'd be interesting to see what happens. We'll be tracking the volume, be giving the updates on it all. But yeah, definitely.
What's the benefits on staking with Lido or Lido or whatever it's called?
Major benefit is that it's liquid, yeah. So like rather than going, well, you don't have to run your own validator node. You don't have to do all the infrastructure setup. You don't have to manage all the risks, etc., and make sure it's kept online. And 2, you give them your Ethereum, they go and stake that. They give you rewards in return. But when you give them, when they stake it, they hand you a kind of synthetic token called ST-ETH. You can then go and trade that ST-ETH on the market, and then to unwind your position, you obviously need to buy that back and then unwind your position. So technically, it's kind of that ETH that has been locked has actually been traded around on the market.
What's been the staked rewards for it? Is it 3-4% or something like
that? 4.6% is for Ethereum. They do other coins on there as well. So there's like Polygon, Solana, Polkadot. They all offer different percentages, but yeah, they do a 4.6% APR at the moment.
Nice. Alrighty. Well, I guess there was one more kind of thing we wanted our listeners to kind of have cleared up, because there's been a lot of FUD going on about this in kind of the last week, and that was obviously, most people would have heard about Silvergate, a bank going under somewhat. which was obviously a result of their Q4 and Q3 2022 earnings throughout the deep bear market of last year, which resulted, once their earnings came out, I think it was a multi-billion-dollar loss, and then a few things got revealed, and then I think 66%. They had a 66% stock price plummet, across 48 hours, and they've been, they've got a lot of connections and partnerships with, the likes of Paxos, Galaxy Digital, Coinbase, Circle, and many others who have kind of been forced to terminate their partnership with the bank. And so it kind of, it scared a lot of people because, you never like seeing one of these big institutional players go under, because it kind of presents, one of those black swan events. And, once retailers start to freak out, it causes a bit of a spiral. But we just wanted to clear this up because, today, actually, there are reports that, Silvergate are in talks with the FDIC officials on ways to kind of salvage the bank. And this is really revolved around ways to avoid this shutdown. And one of these possible options is obviously involving lining up crypto industry investors to help Silvergate shore up this liquidity. So it's a bit of a watch, this one, but hopefully it ends well. I mean, we were just discussing before, and what we will discuss is Binance getting approved today by a US judge to actually purchase Voyager, which is really good. So I think, it was a $1.4 billion deal or something like that. Obviously, Voyager was part of the Lunar 3AC kind of massive black swan event in the middle of 2022, and they were forced to go under with a lot of people, losing their assets and their money. And, that was part of that really catastrophic event. So it's been really good that CZ and Binance, being able to lend another helping hand here. Who knows? Maybe CZ will buy Silvergate as well. Seems like he's kind of saving everything at the moment. But
wonder if he'd use BUSD.
Yeah, literally. So I think the plan really here for Binance, this plan was kind of assembled after, I think funnily enough, FTX did bid on Voyager before they went under. It was this kind of shady thing, and it was actually supported by 97% of Voyager creditors who responded to the proposal. So it was very lucky FTX didn't get their hands on it quick enough.
I'm literally just thinking they bidded on that along with some castles overseas and some mansions in the Bahamas and whatnot. What weren't they bloody bidding on?
Oh, jeez. Voyager office must be nice if they were bidding on it.
Oh, yeah. Maybe next year for the boys.
Yeah. So essentially what happened is, the SEC being the SEC, and, there's a bit of a war on Binance and crypto at the moment, it seems, by everyone. But essentially, I think what happened today was, the hearing, which began, I think, a week ago, the various parties and regulators they were given a chance to object to the proposed sale, and the judge kind of ultimately ruled that none of the objections made a strong argument or that they necessarily could bog down the proceedings. So that's obviously a positive thing, and not only does it help our industry, but expands Binance a bit further as well.
100%.
So that's good. And then I think the last kind of fundamental event, which is really integral to further cryptocurrency adoption and will be positive for the wider industry, has to do with the SEC and the judges in America yet again, but it's actually to do with Grayscale's Bitcoin ETF, which kind of like Mt. Gox, it feels like we hear about this once every 2 weeks in the news, kind of for the last year or 2 years since they've kind of tried to get it up and running. And they've obviously ran into a bit of trouble because the SEC doesn't want the institutions getting in on Bitcoin. But today there was a panel of appeal court judges which began to question the SEC's logic in just drawing a distinction between a Bitcoin spot market price and futures market prices. And I think it's moved in a really positive way where we're going to see this Grayscale Bitcoin ETF get approved. And for those that kind of don't understand ETFs, what this will kind of allow institutions in America to do is actually purchase Bitcoin or trade on Bitcoin without actually having to have the self-custody of owning it and whatnot. And that's what the institutions are kind of scared of, because if they're trading large sums, you don't want it held on a centralized exchange. You don't want it held on a hot wallet or whatever it is. But trading with Grayscale and this ETF will allow them to trade the price of Bitcoin and the speculation without having to own it. And obviously, if it gets approved by the court, it means it's got the regulatory requirements, and that's what institutions are also kind of scared of. So yeah, it only furthers adoption for us, and keeps us going in a positive way.
Yeah, it's huge news, especially after what's happened with FTX and all the rest of it, and institutions just constantly being scared off and delaying, I suppose, their full integration to the cryptocurrency industry. It's massive to be able to finally get such a big platform to attract that institutional liquidity again.
Yeah, for sure. And then I guess just from my end, the last thing and the most important thing to do with today's price action is the great Jerome Powell that everyone kind of relies on to make up their mind these days. Yeah, that everyone laughs at. I often say to our Trading Academy members, I don't think that the great Jerome has much credibility left with his, we're doing interest rates, and now we're in a deflationary period, and now we have to re-hike them, and now we have to accelerate them, and blah, blah, blah. But what I more often say to the Trading Academy members is, he doesn't decide, the market decides. There are always these narratives that will come out afterwards. There's always, the short-term volatility really that happens with retail traders, but those large institutions and Wall Street traders, they're not relying on, they're not waiting for him to say something and they're basing their entire trades based off this. But anyways, the key points from his speech were, getting inflation to a target that's, likely going to be a bit bumpy. The labor market, as we all know, that's kind of the difference with this recession and the inflation period, if that's what you want to call it, is that employment's been so good. So they haven't been able to call it a recession because everyone's got a job. We're more often than not in a recession, there's a lot of unemployment. And really this comes off the back of, the CPI data coming in hot, as most people know, kind of last month, which was obviously for the reading of, I think it was, what's it called? Obviously the February readings for January CPI data year on year, and that came in poor. Now it's a bit ambiguous because there are methodology calculations, which the government like to do as well, and like to kind of change whatever they can. Yeah. But I think the most important thing to take from this is, the chances of a 50 BPS rate hike 45 days ago in March was 1%. A month ago, it was 9%. A week ago, it was 24%. A day ago, it was 31%. And I think as of right now, it's close to 75%. So just his language and what he does spooks the market into believing that they're 100%, or I'm sorry, well, technically 75% going to do a 50 BPS rate hike. But he said in his speech it's based off the data that they get across the next week. And so for all we know, he said this, everyone's retail is sold off. And those that know the true data, the institutions, the smart traders, the ones that actually look at the liquidity, look at the earnings, look at the CPI, and it could come in favorably. And they do a 25 BPS, and all those people that sold today based on a couple of sentences that he said have, gotten wrecked. I think this is the major key for us crypto traders across the next month, is that, if we want to break out of this range, I think that's the catalyst. And I think it's, the huge expectation, like everyone's waiting, it's going to be 50 BPS, and then it comes in at 25 BPS and everyone goes, holy moly, like, and the CPI data comes in, I think in our market update for our members, the Cleveland Fed, who have been, historically very, very accurate, predicting a 5.4% year on year next Tuesday, which is down from 6.4% obviously last month. So, that's a deflation of 1%. Yeah. And then Trueflation, another company who have been very, very accurate as well with their readings, besides last month's they did get wrong, they're predicting it at 4.8%. So, there's huge disparities in what can come through. It's obviously a big watch for all of us. One thing I did want to touch on that listeners might find interesting is that, people think that just because there's going to be a 25 BPS rate hike, or even 50, let's just say, that, markets are just going to tank and die. And just because Jerome does that, there's no money to be made. But if we actually go through history since 1988, in 88 to 89, we had a 50% increase in the S&P whilst rates were hiked. Will, if I could just get you to get that image up for us, it actually shows it on the chart. So it might show it a bit easier for listeners.
That's up now.
Okay. And yeah, so as you can see, we've kind of got this in 88 to 89, there was a 50% increase that you can see. Sorry, the bottom orange line is rate hikes, and obviously the blue is the S&P. Had rate hikes the entire time. S&P improved 50%. In the next era of 94 to 2000, the S&P improved 233%, whilst rates were either stalled or hiked. 04 to 06, very similar situation. S&P climbed 45%, whilst you can almost see that huge steep in rate hikes there as well. And then in 16 to 19, there were some rate hikes as well to kind of slow the economy a tiny bit, and there was a 54% increase in the S&P. Obviously, so far, the market's tanked, I think, now cumulatively across last year and then this year, 13%. However, we're kind of still early into this, say, rate hikes. This is going to increase, go on for the next year or two until they achieve that federal rate. And yeah, it's a bit different because of unemployment, but that's just a key giveaway that not always does the stock market just tank. We can actually get a bit of a rally in the coming months, even if there's and like I said, the catalyst for that might be that it's simply just a 25 BPS rate hike as opposed to a 50 that everyone's expecting. So yeah, that's really everything from my point of view. I believe that's the catalyst to probably get us out of this range if we got at least 25 BPS below whatever the expectation will be going into that meeting. And obviously, I come from quite a bullish standpoint at the moment from my readings on the market, the liquidity, the Eastern economies are opening up. I think last kind of podcast we mentioned this, and we put the article that I wrote about the different metrics for why Bitcoin has bottomed. But obviously you want to look at both sides of the coin, and if we do get a 50 BPS based on somehow shocking CPI data again, and other metrics, then yeah, maybe we could retreat to lower support levels, which could see us at sub 20k BTC again, and maybe the recession will hit a lot quicker than I personally think, and we get a bit of bearish market structure and might have to shift our vision for the year ahead. So yeah, there's a lot to take in and consider, but yeah, it's just a waiting game, I guess.
No, that's exactly. I think we've highlighted what the concerns are, and we've kind of put our touch on them, whether we feel that they are, as concerning as what the nuffies maybe on social media are just trying to push out there, without too much backing behind it. There are definitely some positive spins to it. But yeah, as you say, you can't really predict the markets in the future. We have to wait and see what happens, and we'll obviously update everyone after the rate hike does come through. When exactly is the rate hike? Do we know?
So the main lot of data will come in on the 13th and 14th of March, I believe, which is next week. So that'll be CPI and whatnot, employment levels. And then on March the 21st to the 22nd is the next FOMC meeting. So I think that's US time. So it should be 22nd of March, 23rd of March, Australian time.
Perfect. All right. Well, we'll be back next week for the podcast to tap on that. Is there anything else that we want to go through today?
I don't think so necessarily. Nothing technically from my end. I will just say to anyone, that is freaking out a little bit, the best kind of advice I can give is, you've got your entries in. If you do have liquidity and spare cash, just use the dollar cost averaging method. If we do see a bearish market structure, just have to have the viewpoint that if you are a long-term investor, which all of us are, particularly those that are in the trading academy, even if you get lower prices in the end, this is actually a positive thing for you because your returns will be much greater in a bull run. So don't freak out too much and just kind of have that long-term time horizon mentality and DCA where you can, and you'll be all right.
That's exactly it. So perfect timing. I mean, you got a bit of time. We may see a little bit of down, but we're kind of leading more into an we're in more of accumulation phase, leading into what could be one of the biggest bull markets. So perfect time to be educating yourself. Links are in the description of this video for getting onto the course. You can even book a call directly with our team and speak with Taylor, one of our experts, about what the best kind of angle is for you to be taking advantage of the cryptocurrency industry. If you're not ready to start investing, that's completely fine. We believe in educating first. And in the meantime, check out our Knowledge Center. Links in the description. Follow us on TikTok, follow us on YouTube, and soak in as much free content as you can. We'll be back next week. And between them, we're probably going to do some exciting interviews with other projects. So we'll be releasing those soon. So stay tuned and we'll see you next week.
Awesome. Thanks, guys.
Thanks,
Cheers,
guys.